When you think about what separates the truly great investors from everyone else, it's not some secret stock tip or a magic formula. It's something much more powerful and, honestly, much more rare. It's conviction. And I don't just mean having an opinion. I'm talking about building a belief so strong that it lets you stand your ground when the entire crowd is running for the exit.
So this really is the million-dollar question, isn't it? We have more data, more news, more analysis at our fingertips than ever before in history. So why do most investors still fail to beat the market? Well, the problem isn't a lack of information. It's a lack of genuine conviction. The answer isn't in finding more data. It's in a totally different way of thinking.
And this really gets to the heart of it all. True, lasting outperformance doesn't come from following what everyone else is doing. That's the consensus. By definition, that just gets you average results. No, outperformance is born from conviction. It's about having the courage to develop your own ideas, back them up with your own work, and then bet on them, especially when nobody else sees what you see. Okay, so that all sounds good, but how do we actually build that kind of unshakable conviction? Well, that's what we're going to do. We're going to build it piece by piece using 4 powerful pillars. We're going to see why you need to go concentrated, why it pays to think small, how to find your niche, and then the most important part, how to double down. Put them all together, and you've got a complete blueprint for a whole new way of investing. So think of what's coming next not just as a list of tips, but as an equation, a formula for building the kind of conviction that truly separates you from the herd and lets you lead with purpose.
All right, pillar number 1. Now this one's going to challenge something you've probably heard a million times. Diversify, diversify, diversify. But the conviction approach says something different. Instead of spreading your money thin, the first pillar is to go concentrated.
Okay, so let's look at the 2 sides of the coin here. The consensus view, what most people do, is they make a whole bunch of little tiny bets. It's diversification to the point where you've basically diluted away any chance of real returns. It's a recipe for being average. The conviction view, it's the total opposite. You focus your capital only on your absolute best ideas. This isn't being reckless. It's the ultimate sign of confidence in your own research.
Now, if you're going to make these big, concentrated bets, you have to be able to move quickly, to be nimble. And that leads us to a really counterintuitive second pillar. Think small. We're always told bigger is better, right? But when your goal is to generate real alpha, those market-beating returns, size can actually be your single biggest enemy.
So here's a simple way to picture why size is the enemy of alpha. A massive fund, we're talking billions of dollars, it's like an oil tanker. Sure, it's powerful, but it's incredibly slow and clumsy. It can only invest in the biggest, most obvious companies. But a smaller fund, that's a speedboat. It's agile. It can zip into these little overlooked opportunities that the giants can't even touch. And that is where you find a real advantage. Okay, but being small and nimble doesn't mean much if you don't know where you're going. And that brings us to pillar number 3, find your niche. In a world full of generalists who know a little about a lot, true conviction is forged by becoming a specialist, by knowing pretty much everything there is to know about one specific area. So what exactly do we mean by an edge? Well, you can think of it as your unfair advantage. Maybe you have a PhD in biotech, or you have a really unique insight into the economy of a specific country, or you've mastered a really complex investment strategy. It's that one area where you simply know more than the market does. And here's the really cool part. An edge compounds. It's like a snowball rolling downhill. The more time you spend focused on your niche, the deeper your knowledge gets, and the sharper your insights become. That little advantage you started with starts to get bigger and bigger and bigger, year after year. I mean, think about it this way. If you needed open heart surgery, would you want a general family doctor doing it? Or would you want the world-renowned cardiac surgeon who's done that one procedure thousands of times? Of course you want the specialist, right? Because that focused expertise leads to much better outcomes. It is the exact same principle in investing. Okay, you've gone concentrated, you're staying small, you've found your niche, but all of that is totally pointless without action. This brings us to the final and most critical pillar. You have to double down. This is the moment where you translate all of that hard work, all of that knowledge, all of that conviction into a single, decisive move. This is where conviction meets capital. This right here, this is the payoff. You've spent the time building your edge. You've formed a thesis that nobody else seems to see. So what's the final step? You act. And you act decisively. You don't just dip a toe in the water, you upsize the bet. You make it big enough to actually matter, turning all of that intellectual work into a really meaningful outcome.
All right, let's put all these pieces together and look at the final blueprint. These 4 pillars aren't just separate ideas floating around. They actually lock together to form a powerful, integrated philosophy for building an investment strategy that is uniquely yours.
See how this all connects? It's a system. First, you reject that idea of weak diversification and you choose concentration. Then, to make that work, you stay small and agile. That agility allows you to dominate a specific specialist niche, where you build a real information edge. And then finally, when your conviction is absolute, you double down to make that edge truly count. That is the blueprint for outperformance.
So I'll leave you with one final question to think about. Take a look at your own portfolio, your own ideas. Does what you see reflect the market's consensus, or does it reflect your true conviction? Because in the end, that's the only thing that's really going to make a difference. Thanks for tuning in.